Thank you, madam, for your kind words and the introduction. Um, is it working? That's working. Pull it up. Yeah. So thank you for the kind words, ma'am, and the introduction. With your permission, I think I'll be more comfortable in English, and I hope all of you are. I have, before I get down, I wanted to share a brief of what we are trying to address here. And I understand all of you represent various departments in the government. But I wanted to touch upon a little about digital payment infrastructure and how sort of the evolution happened, because I think it is important. Like madam said, this is not one entity's job. It requires partnership across banks, regulator, governments, and technology companies, and how the camaraderie between all 4 or 5 entities together made this possible. Second, some examples of success stories. Not everybody is a success story. We have tried a lot of experiments as a country. So not everything has been a success. So maybe some examples what went right, and some of the other examples where we are still catching up. A little bit about NPCI, how we were formed, because I think that is also an example of how a non-for-profit organization has evolved with the support of everybody in the industry. Some background to our products. Most importantly, I wanted to share some of the use cases you must have experienced. Madam spoke about DBT, but there are many other services that we operate in where other states and the central government has taken, adopted them. And since TechWari is about technology, I felt that we should talk a little about what's coming up in future. Not that NPCI has taken leap in it, we are also experimenting. We all feel that technology is changing with the introduction of AI, how people operate, how people do their daily jobs. All of us, whether we are in a technology role or a non-technology role, it's a transformation. I keep comparing this with the late 90s when I was completing my engineering from Pune, and the first wave of technology started coming in when we started learning computers and internet, and we used to learn about Word, Excel, PowerPoint, so many other things, and a lot of our seniors at that point in time did know about this, and they didn't care about it also. I think very quickly they were phased out. So I think this is the next wave of technology, is what we believe NPCI. AI is not for only technology people, I think it is for everybody. And if we don't adopt it in whatever little fashion, I think we will be left wanting at some point in time. So I think some insight into what we are doing, and hopefully all of you will be able to get some learning out of that. Okay, so start with history. It's a chart, not very, I'm sure it's not readable 100%, but this was important because people do believe that the magic is done by NPCI, but I just want to call it out. It has been a structured effort, not just of the last 10-15 years, but over the last 30-40 years. The structured effort to build more formal economy in the financial services sector. The introduction of private banking, opening up of public sector banks, amalgamation, and various initiatives. So if we were to divide this, it would be establishment of RBI and some of these governing principles, foundation phase, digitalization phase, which is the early 2001 to 2010. All of us have experienced it. Mobile phones picked up and a lot of digitization happened. And once that digitization happened, the early 2010s, which is 11, 12, 13, 14, 15, 16, is what we call as the innovation phase. Because as technology got penetrated, a lot of innovation came in. And that's when UPI got established, UIDI got established 2014, UPI 2016, BHIM. I think a lot of these initiatives were experimented with. And then post 2016-17, the next 10 years have been about scale. And this is what all of us keep hearing about and discussing about. We keep talking about scale, but I think a lot of this was in making prior to the scale. Of course, things like COVID helped us adopt faster. There was, some of the other elements that brought penetration into the ecosystem. So, just saying that it's not an overnight magic. It is something that we do based on what has been done in the past. And important to innovate, because if you don't innovate, if you don't experiment, the acceleration doesn't happen. So if this phase would have not happened, we would have remained here. We would have not moved beyond. We would have, look at what happened to DTH industry. They started in the same time, but now they are nowhere. They have been overtaken by OTTs. So I think important aspect is that innovation is key to penetration and acceleration. Unless we do that, I don't think we'll be able to move forward. Some structural factors also, like I said, we as NPCI said, don't want to take the entire benefit of it. There were certain structural challenges why UPI or NPCI was able to grow at that speed and digital payments were able to grow. Macro elements largely on low contribution. So there was no digital payment prior to 2013-14. Very little. NEFT, RTGS maybe, and some debit cards. Low overall rate of financial inclusion. Higher dependency on cash. Almost 86% of daily retail payments were cash driven. Imagine that's 2015-16, and the number today is 20%, which is 80% now digital. So it's completely reversed in 10 years. Demand drivers, broadly on the consumer side, there was this fear of theft, fear of unknown, unpredictableness as to I'm depending on a technology, what will happen to my money. Lack of interoperability. You were locked to a bank, locked to an ATM. If you have a bank account and a card, you could only go to an ATM of that bank account or that bank, not go to another bank. And the big days, the Bharat that we call it, was still out of it. So the small merchant base, 100 million of them, didn't have that financial access. Supply side, I think organizations were still not catering to the middle and the bottom of the pyramid. So there was lack of financial services in tier 2, limited financial products. Even today, if you look at penetration of payments, that has gone reasonably ahead. But penetration of credit, penetration of insurance, penetration of investment products is less than, I would say, 10%. And that's a big contributing factor even today on growth of financial services. Now, some numbers, and I think, like I said, I spoke about contributing factors. The introduction of Jan Dhan account, which gave access to almost 80% of our population to bank accounts, which is 20% of world population today. So almost 1 billion bank accounts opened in 2013-14. Mobile penetration, nothing would have been possible without mobile penetration. So if mobile revolution would have not happened in 2001-2010, I don't think NPCI or UPI would have been where we are. Aadhaar, the initiative of the government to set up a national registry. The advantage of Aadhaar was that people were able to now link their bank accounts with Aadhaar and create an identity of not just themselves, but also their financial savings account. Economy, in terms of our growth, and of course, the amount of IT services professionals that we had. I think these are some of the contributing factors that led to, our innovation in 2016-17. This is a slide that represents some of the DPIs. I'm sure all of you have heard, listened, or experienced some of them. We've tried to gather it all together here. There are more happening, but I think these are some of them. We all are aware of account aggregator. It's a DPI layer which allows entities, regulated entities, permissioned entities to have access to your account and transactions of your account. Unless you give permission, they can't have access, and you give permission for a variety of reasons. Maybe you're applying for a loan, or you're applying for an insurance policy, or anything of that nature, where the organization needs access to your bank history, and you allow them for a particular period, and they're able to pull that out. So you don't have to pull out your bank statement and keep sharing physical statements or Excel sheets or PDF. They can pull it out themselves. It's run by an organization called Sehmati, again a non-for-profit. It's a very successful example of how DPI is created. We spoke about a lot, and this is what I'll cover a lot here, is the cashless layer, which is the digital payment layer. And it is not just UPI. It is also a few other platforms like IMPS, AEPS, Madam spoke about Aadhaar payment bridge where DBT happens. So all these are under cashless layer. The paperless layer, the introduction of Aadhaar, which allowed us to do eKYC, e-signing, digital locker. All of us have experienced it somewhere, where I can put my documents in digital form, and again, very successful. The presence-less layer, which is Aadhaar card and mobile Aadhaar. The tax layer, I think these are evolving now. Tax layer, which is GST, e-way bill, e-invoice. These are slowly evolving and becoming identity for businesses. These are all identity for individuals. These are becoming identity for businesses. E-commerce layer, which is GeM and ONDC, again very evolving, not very successful. Maybe we can talk about it later in a Q&A in terms of what things went well for them and what didn't went well for them. The lending layer, again, it's a new initiative, again not very successful today. I think still evolving. It's called ONDC and OCEN. And the newly launched logistic layer called ULIP, again very new and very early days for that. So I think all of these are examples of digital public infrastructure, and all of them carry one thing very common, that there is something behind them in the nature of a non-profit entity which drives these initiatives. Now, these organizations will drive the specifications, the roles, the responsibilities, the rules of the game, and work with the ecosystem to onboard supporting layers. So, for example, in UPI, NPCI worked very closely with banks, payment organizations, technology organizations, banks, regulators, government, to frame the rules, frame the policies that will give confidence to the consumer, that will give confidence to the banks, to say how can they open up their banking ecosystem to a Google, PhonePe, GPay, WhatsApp, and all of them. So I think that's the common part. Unless you have a very strong entity running those rules, framework, specifications, and that central policy, it becomes difficult. And I think that those are the challenges around maybe ONDC, and we are seeing those challenges in ONDC, OCEN. These are just protocols. There isn't an organization behind them to run them, to incubate them. So I think that's the important learning here. And second, more important part is that it is not just a government-led initiative. It's a combination of public and private. So it could be private banks, private technology companies, public sector banks, public technology companies like CSC in some cases. So I think that's also the second important part. And in some cases, it is also the state government. For example, and I'll come to that when I talk about NCMC, where I think the Delhi government took first step and the Tamil Nadu government took first step in adopting that payment instrument. Like I said, it's a combination of 3-4 organizations or focal points, which is the central body, which is non-for-profit. Then you have the banks or the sponsoring bodies. So, for example, in case of ULIP, which is the logistic platform, The logistics company will be the primary participants. But the third and very important are the regulators, who kind of ensure that when such digital public infrastructures are built, they are built with consumer protection in mind. They are built with security, privacy in mind, and that the framework and the model doesn't go free. And I think that's very important. I'm not getting into details here, but important thing to say that regulators in our country play a very important role. Every digital public infrastructure will have a regulator behind. If it doesn't have a regulator, then it is ONDC does not have a regulator. And that's also one of the reasons why it is still evolving. I wanted to go deep into how payments have evolved with RBI's intervention. So it's not just by setting up NPCI and getting banks to participate, things have evolved. I think regulator has played a very important role. This was one example I wanted to go deep into, to say that from the starting of defining an act, KYC direction, access and use it, again, you will see all these initiatives will be consumer focused. Access, usage of storage of data, guidelines, PPI direction, KYC, lending, IT, payments. I think these are all regulations that were principle based regulations that RBI brought in to ensure that as this digital payment infrastructure is evolving, it is not keeping consumer interest second, it is keeping consumer interest first. So, staying focused on digital payment infrastructure, finally, what did we achieve? So, apart from numbers, apart from, I would say, volumes, penetration, all of that, two things. One, access and inclusion. Madam spoke about it, that it has gone to almost every nook and corner in the country. We see it in the highest to the lowest point. You can use UPI. Almost 450 to 420 million active users. That's half the adult population of this country. 100 million merchants. These are from small kirana shops to the large enterprises. A lot of credit and MSME loans disbursement. So I think that is the access that digital payments have given. The second and the most important thing is the efficiency that it has brought in. Today, if I wanted to know about a certain consumer, to say what is his background, how much salary is he getting, where is he spending, access to that information was very costly or tough and time taking. All of that has come down drastically. Some because of UPI and digital payments, some because of Aadhaar, but it has drastically come down. The KYC cost has come down by 85%. So today a bank or an NBFC wants to give loan, the cost of doing the KYC and assessment has come down by 80%. Unsecured loan, 65%. And that for account opening, 95%. Today, most of the account openings happen digitally. You do video KYC, you download an app, and digitally you are able to open up the account. And usually they follow a step-up mechanism. So they'll open up an account with lower limits, and then slowly as you transact more and you give more documents, then they will increase your limits. So I think these are the two elements I would say are the biggest advantages of digital payments infrastructure or public infrastructure, that one, they bring inclusion, and secondly, they bring efficiency. And which is so important for all of you, I am sure, because we have the problem of dealing with the middle and the bottom of the pyramid, where both these things are a problem, the access and the efficiency, because they are not technology savvy. Those people are not technology savvy. They need assistance, they need access. Somebody has to go down to them. They will not come up to you. They will not just download an app and start doing things. Somebody has to go to them and explain them and give them that trust, that why a certain app or a certain service is important to them. And that access has to come at a low cost. It's not something where you can sustain with a high cost. And I think this is where the next phase of what a digital public infrastructure will have to bring in, as to how, while we have demonstrated scale and penetration to a certain level, how can we cover every individual in this country, something like what Aadhaar has done. But again, if you look at Aadhaar, the reason of why possibly it covers every adult in this country is where a massive amount of infrastructure was rolled out as Aadhaar service centers. If that was not the case, I wonder if Aadhaar would have been a billion today. So I think in digital public infrastructure, we all believe that mobile phones will solve most of the problem, but I think a lot of this will require assistance, and these composite models will have to evolve in your respective areas, districts, where segments which are technology averse, fearful, lack of understanding, lack of trust, they need to be assisted into onboarding on these platforms. I want to take a pause here because I'll go into NPCI. And if you're okay, sir, with your permission, any questions, then maybe I can, before I move to the next section. Sir.
Nowadays, the payments from C to B, they happen very fast. But in case the payment fails, then it takes a lot of time to, the money to come back. So is NPCI working on some protocol, revised protocol, so that the time limit gets reduced?
It is a problem. I think what you are calling as C2B, we call it P2M, person to merchant. And the reason, so there are two types of payments, typically retail payments. One is when you pay to a person, so we call that P2P, and then there is P2M. In P2P, what happens is that when the payment is done, the money is reflected in the receiver's account instantly. So if I was to pay you, sir, whatever money I pay to you will be reflected in your account within the next second. And therefore it is, I would say, more beneficial to the receiver. In P2M, typically the payment, while the promise of payment is made to the merchant where the payment is made, the money doesn't come to his account immediately. The money typically follows a cycle. So it can go as low as 2 hours to 2 days. So he can only give the refund back to you once he receives the money in his account. And that typically depends on the banking partner that he has or the fintech aggregation partner that he has in terms of when that money finally comes to his account. If it comes in within 2 hours, you are likely to get the refund maybe in the next 3 hours or 4 hours. But if it comes in 1 day, then he can only refund after 1 day. So I think on UPI at least, I don't know the exact numbers, but most of the refunds do happen within T+2, which was typically not the case when it used to be card payments and other payments, because it would go till T+7. So we've become better, but not the best yet. And I think there are still some inefficiencies in the last mile where the merchant connects to his bank and the bank takes some time to reconcile and settle with the merchant. So hopefully, to your point, we'll get there. But I think from 7 days to 2 days or 1 day is something that we've achieved. It should happen more as we move forward. Okay. Okay, I'll quickly go through it. I will not take too much time. Some of you may only currently be aware. NPCI, non-for-profit. We have 65 stakeholders, a mix of all this: public sector banks, regional rural banks, private banks, foreign banks. HSBC is a stakeholder, cooperative banks, and payment system operators. So that's the mix. Almost 65 of them. It's an umbrella organization set up in 2008. We started operation in 2010 under the guidance from RBA and IBA. So, like I said initially, that one of the most important factor for a DPI to exist is the objective of why it is formed, and there has to be a regulatory body behind it for it to, get into that space with that support and push. A little bit of tech journey. I spoke about it, I think, in the introduction video, When we started, we were using legacy technology. Like many of us, we were buying technology. We had Oracle, we had, all those paid softwares, vendor dependent, and for everything we had a server. Slowly, we realized that if this is going to scale, it won't scale with this architecture. And we will have to start building in our own source code. So by 2016-17, before the scale happened, we removed every paid software we had in NPCI. Entire source code that we run today, whether it is UPI, RuPay, Aadhaar-based payment, DBT payments, FASTag, anything is owned and operated by NPCI. So entire software, application software, the entire source code is owned and run by NPCI. There is no paid software. The databases are open source. So we use Postgres and some of those well-known data sources, and we created our own IP. It's a completely different matter that now in this current age of AI, IP is losing value, because if you are able to give a prompt to an AI agent to build a UPI-like server, he can build in an hour. So the source code that we created, I think, is becoming irrelevant. And I think I'll talk about it when we come to that next, but that was 2015 to 20. Sir, I would say that our employees are our tech partners. But yes, we have taken support from some of these IT services companies, mostly Maharashtra based. I would say Maharashtra has the unique advantage of great amount of technology talent, be it Nasik, Pune. So Winjit is one such organization, PiCommerce another organization. These are all Maharashtra and Pune based. So typically these hotbeds, Nagpur, Nashik and Pune, we have a lot of small IT services companies that we have. Sometimes, when the amount of coding becomes too large, then we engage them to help us. But again, we only use them as T&E. So they help us build the code, but the code is ours. And then we have some in Bangalore also, and Chennai and Hyderabad. So that's how we are spread. But now, I think we are almost 80%, 90% in-house. 2001, 21 to 25, I think DeFi, AML, Deep Tech, these are new engagements. We haven't done anything major in terms of launching, but I think we are experimenting. We are forced to experiment a lot on that, and I will cover that in my slides in the end. But and what we calling as NPCI 3.0. So to say that source code is no more an IP, and how can we have what we call as a more agile and flexible structure of operating, where either we have somebody who can build and somebody who can sell. Just two I would say employee types of employee. That somebody who can build and somebody who can sell. So one who engages the markets and somebody who builds the product. Apart from NPCI, over the years we've also built some subsidiaries. Bheem, which is our own app. Some of you must be using it. This is like a UPI app. Bharat Connect, this is bill payments. I'm sure all of you would have somewhere interacted where billers can come and connect and they can load their bills, and consumers can fetch and pay their bills. And NPCI International is our humble effort to see which countries would be interested in UPI and NPCI products in their own countries. So that's another subsidiary that we have. Just a map of our products. These are all the products we run. Interesting thing, it may appear that all of these are independent applications, but not many people know that once we created our own source code, most of them use a common source code. While we can put them in different instances, but the source code is common. And that's the advantage of running your own source code, that it's like you have that one single employee who can do multiple jobs. Is this working, Sakesh? Just a quick video on our journey.
Sound is not.
It's okay. So NFS, IMPS, that's 2010, ATM 2011, NACH 2012, RuPay 2013, 14, APS, the backbone of Aadhaar based payment. Then we went international, then UPI 2016, BHIM 2017, FASTag. We launched the next version of UPI, NCMC, our international in 2021, and then more products on UPI, cash withdrawal on UPI, feature phone on UPI. Not many people know that we have UPI available on feature phones. Not all models, but the Jio phone and the Nokia phones. Always forward. Yeah, some numbers I don't want to talk about. Okay. The most important part. So this is our view. These are some use cases we all felt that could be helpful in your journey, in your state and your constituencies. And I'll go product by product. I'll talk about some use cases. We can make it interactive. If you have questions, I can take them. So one of the oldest product we have is NACH, National Automated Clearing House. Basically, it's a product which allows you to make bulk payments or receive bulk payments. So let's say you want to make salary payments, salary credits. You will upload a file, and on basis of that file, a set of people will be paid a certain amount. It can be frequency controlled, it can be value controlled. All those controls are possible. You will have a sponsor bank through which you will upload, and then a lot of dividend payments happens this way. When organizations want to pay dividends in organizations that are listed, they use NACH. A lot of people use NACH for salary processing. Some governments are also using NACH if they have the account number. For making DVD payments also. So these use cases have evolved. We also launched something known as eNACH. So a lot of merchants use NACH because they want to set up auto payments. It could be for loan recollection, EMI collections, and many such use cases. You can set up that mandate for using net banking, debit card, Aadhaar, and as you're disbursing the loan, the mandate is set up in the flow, and you can then post that mandate. The merchant can post that mandate regularly. So broadly, two use cases: the B2C use case, where I am crediting a set of people. It could be lakhs, millions, whatever that number is, or consumers making merchant payments on a regular basis. So I think both these options are possible. The system also supports what we know as the most famous and the most talked about DBT, or what we call is the Aadhaar based payment. So the same software, the same code, in case you don't have the bank account number, but you have the Aadhaar number. So we can do what is known as Aadhaar based payments, where you upload the Aadhaar number, and NPCI has an Aadhaar mapper, which means that against that Aadhaar there is a bank account number that we have in our system, and we are able to then process payments to that account number. So you may not have the Aadhaar number, bank account available to you, but the Aadhaar number, and using NPCI Aadhaar mapper, payments can be processed. Majority of government DBT payments are made using this process, which is Aadhaar based. Now, very recently, the EPFO commissioner, I met him 2 weeks ago, and LIC have come to us. They have a huge database of consumers who are untraceable. And they are having this problem statement to be able to distribute pension and whatever policy residual is left. Unfortunately, for that huge, some 30-40 million, they don't have Aadhaar number for all, but they have for some. So at least using that Aadhaar, they'll be able to now at least distribute these residual policy accruals or the pension accruals to these people. So like I said, so this great use case around Aadhaar. There is account based. If you have account, you can use account based. And then there are a lot of non-DBT which I spoke about, which is salary credits, or in general any credit that you want to give to a large section of the people. I mean, it could also go to a private use case where I as a business want to, let's say I'm Maruti Suzuki and I want to give 1,000 rupees to everybody who owns a Maruti car. So I can use that. It's like dividend. Yeah.
These Aadhaar-based payment systems, by default, the last account which has been opened gets linked to Aadhaar.
Yes, sir.
Now, in many cases, what happens is even the beneficiary does not want the benefit to go to that account. So, is there any via media which can be used to ensure that I choose the account where my benefit flows?
You're right. That is a default process that the last updated bank account is by default made the linked account. I may have 4 accounts, but my latest one will be linked.
Last one which I opened.
I think we've taken this problem statement in Aadhaar because the linkability of account number to Aadhaar is actually the bank's prerogative. So the bank which updates the last becomes the last bank account. If you were to give the consumer that choice, a lot of this problem will be solved. But there are some rules and policies that have to be framed around it, along with IBA, which is the Banking Association, and Aadhaar, UIDI. So those conversations are on, sir. We don't have a solution yet.
Okay. Yet another thing is that there are accounts that go dormant.
Yes, sir.
There are accounts that go dormant. The person is not operating it anymore.
Right.
It may be for any reason. They have stopped operating the account or they have passed away or something like that. When the account becomes dormant, which is linked to NPCI or Aadhaar payment base, there has to be some automated mechanism which raises a flag that this account is inoperative. Because otherwise what will happen is the payment will keep flowing to that account.
Correct.
So
Correct.
that is one more thing which I really wanted to ask.
Yeah, no, you are right, sir. I think this is also a case in some certain scenarios where by mistake I have made a payment to someone and that account is inoperative or let's say inactive. This is a problem that we have taken to RBI and IBA, because the banks have to come back and apply a certain rule around it to say that if the account is inoperative for let's say more than 1 year, which means no debit or credit has come in that account for more than a year, or no activity has happened in that account for more than a year, then they will not allow credit. They will allow debit because it is consumer money, but they will not allow credit. Now, I don't think it falls very nicely with banks, because all banks will like to have credit because it becomes their float. So I think that policy is a continuous debate, and even I foresee because this also becomes a problem in fraud, where such accounts are used as mule accounts. and only credit only accounts.
Yes.
So I think it's a problem, sir. It's a structural problem. We need the banks, and mostly it happens around public sector banks because they also have this responsibility of maintaining every account. Typically, if you go to a private sector bank and you don't operate for a year, they will put so many charges, you will yourself go and close it. But in public sector banks, SBI, Punjab National Bank and other 12 such banks that we have, I think they carry that responsibility and even fear that I cannot make this account inoperable. And I need some rules either from RBI, which is the regulator, or from Finance Ministry or DFS to say what rule they should follow to then make them inoperative for any credit also. So I think, again, I don't have a clear and straight answer to you, but it's a known problem, sir. And we have taken that up with the RBI and IBA and DFS to say that it is important that such credit rules are also applied, because they also apply rules on debit side. If your account becomes interoperable, if you're not operating your account for a year, some of the private banks don't allow you debit. So you have to actually go to the branch, redo your KYC, prove that you are live, and then they will make it active. So if that process can be made or applied for debiting the account, why can't that process be applied for crediting the account? I think that's the argument we have taken. Hopefully, we will come up with some rules very soon.
There's one more flag, which is on the previous slide.
Yes, sir.
Now, when we are having these BHIM, no, not this,
Okay, no problem.
when
Yeah.
I'm using BHIM application.
Yes, sir.
Now, most of the applications, whether they are banking or any credit card applications and all, they are tied to the SIM card. They are mapped to
Yes.
the SIM. If you don't have
It's called device binding.
device binding.
Yes.
Now, device binding suffers a problem when somebody is using an eSIM. The applications fail to detect the SIM. Every time you want to go, it says fail to detect the SIM. So I think there is some issue there. Just wanted to flag it.
Yeah, no, you are right, sir. The physical SIMs have been in practice, and of course, the device binding process was built keeping that in mind. As manufacturers are moving towards eSIM, today eSIM is not a mandate. We don't have any manufacturer which says only eSIM. But in the other countries, they have moved to eSIM only for variety of reasons. At NPCI, we are now introducing some of the new device binding methods. We have piloted them. So the typical device binding method is the device sends a message and then the backend server validates. We have now introduced a method where the backend server sends a message and the device sends it back and then it gets validated. And there is a third type that we are experimenting where it is via the mobile signaling channel. Sorry, it's getting a little technical, but it's via the mobile signaling channel, which is foolproof. And whether it is eSIM, physical SIM, it works on all types. Today, the large apps have rolled out 5-7%.
Most of the banks have migrated to it. They detect, like SBI and all.
Yes, it's not a bank. It's not a bank specific issue. It's it's the app and NPCI, whichever app you use, whether it is Bheem, PhonePe, Paytm, Google. It's app and NPCI, and like I said, this third type of method, or what we call as silent mobile verification. You as a consumer will not, today when the device binding happens, you are able to see that it says message being sent, you can see that. But this is a method where you will not be able to see what's happening, and it happens in the back end. And these challenges of eSIM will be taken care of. So this new method is about 5 to 10% rolled out, and I think in the next 6 to 8 months, we will have this sorted. The only problem we have is that operators have to participate. Till now, we were only able to get Jio and Airtel, which covers roughly about 70% of the market. Very recently, Vodafone has joined. So now that covers about 90% of the market. We still have one player left, BSNL, who has not joined. So I think with that, we should be able to, this will get solved. but actually the problem statement we raised, and I wanted to come back to the point that systems of such scale are not built in isolation.
That's true.
They require participation from everyone. I don't think, while we are the front end body and we take all the, claps around it, but I can tell you it's not something which is built by one single entity. I think a lot of people and organizations have come together for that. NETC, I'm sure all of you have experienced it, started as a national highway program, and slowly we are hoping to move it state highway. I think it's important, as wherever you have tolling mechanism, this helps as simple as helping you reduce revenue leakage, if that's the primary problem statement that you're facing. And now, very recently, you must have heard in news, we have now introduced barrier-free tolling. So the barrier-free tolling means no barrier will be on. There will be continuous movement of the vehicle, and only if the FASTag is blacklisted or unfunded or below the tax, the toll tax, the barrier will come down. Otherwise, it will remain open. And if you want to know, the way we are able to manage this is that there is continuous few kilometers before the toll, more receivers are deployed to continuously track the balance on the tag, and which means that before the vehicle approaches the toll, it is well known whether the tag is active or inactive or blacklisted. So the barrier does remain open or go closed. So that's what we are doing. So it of course requires a little bit more capex on the toll plaza, because you have to put more receivers. But I think it saves a lot of time, because now you can go barrierless. If a vehicle gets stuck because his FASTag is blacklisted, then of course there will be a stoppage time, because the barrier will come down and they have to pay cash or something. But at least this will cut down some time in many cases. So I think this was one product which has always been evolving. National highways, I think we now cover 1200, some numbers, state highways 700. Multiple issuers and acquirers are live. We've also taken additional use cases. We have taken it to parking, we have taken it to dry ports, and one big problem statement was incorrect toll value of a heavy vehicle. So when we used to have this heavy vehicle, multi-ton vehicle coming in, they will under quote their weight or tonnage to avoid heavy tolling. And then it will create traffic problem, because there will be an argument, and then somebody will then take the truck to the weighing bridge and then come back with the right weight and apply that toll. So now these toll plazas, some of the cases where there is heavy movement, we are working with them to put the weighing bridge within the toll lane itself, and basis of that appropriate fare is calculated and deducted from his FASTag. So to avoid that physical interaction that is there today, where the driver quotes and then there is a settlement between the toll operator and the driver, and these are all going as cash payments. They're not even going in FASTag. So that's also we're experimenting. Yes, ma'am.
So in the experiment you told that you're going to put interceptors.
Correct, ma'am.
To detect the FASTag.
Correct.
So are you also thinking of some other value-added services, like we have a data of stolen vehicles or suspicious vehicles. Now our challenge is that when they reach the plaza, there is hardly any time to
take action
with that data.
Right.
So are there any plans to include those value-added services also? Because Maharashtra is moving to some new system
Yes,
for
ma'am.
Challan or something.
Yes.
So can we also
Madam, I'm not sure if you are aware that at Ministry of Road Transport, I'm forgetting the name of the secretary. He came from Haryana. Uma Shankar ji. Yeah. So he had brought in this concept a year ago, and I think we're almost in the last phase of implementation, where in case there is a penalty or a fine on a certain vehicle, they're linking the Parivahan, whatever database they call it, with the FASTag issuers via us, so that that appropriate fine can be collected from FASTag. So it's the reverse that what you're asking, but they're planning to do that. So which means that no fine goes unpaid. And to your point, that if it is a stolen or a vehicle with some penalty or certain unwanted element attached to it, as it is passing through toll plaza, you want to catch him. I think in the next 1 year you should be able to do that. The reverse is possible, like I said, where the traffic penalty can be taken from the toll FASTag. But for this use case to operate, currently the toll plazas are not real time. What it means, after some time, and we have now introduced real time specifications. So slowly and slowly, all these toll plazas that you see are going to move to real time, which means that in real time it will check your account, and in real time, if your account does not have balance, then it will not allow you to go. And if it is checking balance, it can also check any pending obligation, and if there is such pending obligation, then also it can stop that vehicle. But if you were to make these as enforcement points, it can create some problem on traffic. So we'll have to really think about, because the whole idea of tolling was to have seamless traffic. If they become enforcement points, they will become like checkpost, and then you will have those serpentine queues.
Want alert from your system so that we can stop them after
That's possible. I think those can be worked out. I think once all of them go real time, but even if they are not real time, in 15 minutes you can get the alert.
is the next movement,
So that database of checking, getting to know which vehicle passed through, and checking it with your database to say that this is the. In fact, a lot of transporters have asked to have access to FASTag central database, because they find it as the most accurate way of knowing the location of the vehicle. Despite all the GPS and everything, they know that if the FASTag is being deducted at this toll plaza, for sure the vehicle is there. The GPS could be anywhere. So I think same thing that you're asking for.
This new system is going to see the new receivers and going to see the account details. That is bank account or
FASTag account, ma'am. And just to let you know, FASTag is not an account. FASTag is a instrument. In 99% of the cases, it is linked to a prepaid instrument.
Yes.
That is how the market has evolved. But it can be linked to a credit card, it can be linked to a debit card, it can be linked to a current account, it can be linked to any account type. Market has not evolved like that.
account will be stand by the receiver.
It is held by the receiver. So in most of the cases, because people wanted to sell FASTag off the shelf, now to sell the FASTag off the shelf, you needed to have an account attached. So the most easiest way to sell an account was prepaid account. So in 99% of the cases, FASTag is linked to a instant prepaid account, but technically it can be linked to your credit card also. Maybe in time that will come. But to answer your question, yes, it will check my underlying account that is linked to it, and then allow me or not allow. And when real time comes, then it can be done on the spot. So my point here was that while we call it FASTag and we call it NETC, the use cases are many. Wherever you have dry ports, parking spaces, you can use FASTag to bill these vehicles for all the services and charges that you have. Important, and I don't think a lot of information is available right now, so I wanted to spend some time. We spoke about UPI and we spoke about the numbers. If you remember, there were 500 million users we spoke about. But that means other 500 million are not there. Because if you say 1 billion bank accounts are active in the ecosystem, what about the other 50 crore? 100 crore bank accounts, 50 crore is active. Where is the balance 50 crore? The balance 50 crore is very active. Just that they don't have money in their account. So they don't use it. They have no use case of using UPI. A lot of those are DBT accounts. Maybe some are prepaid accounts. So even if they were to link their account, they can't make any transaction. They will straight away go for cash out and use it as cash. And most part of the month, they're dependent on some form of credit. Somebody is giving them credit. So we said the problem of the next layer, which is the middle and the bottom of the pyramid, is the credit hungry segment. And that is why credit in our country is less than 10%. Because formal credit by banks is not scaled up as much as I think all of us expected. NBFCs have moved in, people like Bajaj and many others, but still the credit is very underpenetrated. Today, I think there are about 400 million credit-worthy people in the country, 40 crores. Only 100 million have been given formal credit. So that's 10 crore or 15 crores. Good 200 million or 20 crore people are still not having credit. So we said credit problem needs to be solved and hopefully UPI can solve it. So what we're trying to build is that when you scan a QR, you have a UPI app, you scan. When you scan a QR, then on the fly, if somebody is willing to give you credit, some bank, small amount, let's say 5,000, 10,000, then that discovery should be possible. Then link it to your UPI handle and use it. So we call that credit line. And it could have a private use case, it could have a public use case. So for example, Mudra scheme, central government has these 7-6 priority sector lending schemes. Today, those loans are given as full disbursement to account. After that, what happens to that money is little known because the money is disbursed. Of course, there are audits and all of that. Specifically in case of SME loans, you have to keep submitting account statements and expense statements. But there is always a risk. So what the government is now planning to do, and it's already announced, at least the central government, is that all the priority sector lending will be given as credit line, which means that the process is same. You go to a bank, you apply for a loan under a particular scheme, the loan gets approved, but the money does not get disbursed. Instead, you are given a line. Line means a credit line. And then that credit line you link to your UPI app. And then go and make your transaction. So what does that do is that while the loan is disbursed technically as line and the end use monitoring can happen. Like Madam was talking about that once you give DBT in the account, you are able to see transactions. Same way, once you link this credit line to UPI, you are now able to see where is the money being spent. Is it being spent? So if you give fertilizer subsidy or something that you credit line you give, or education subsidy or education loan, is it being used at a school or a college or is it being used somewhere else? So I think these use cases are something that we are now trying to drive in the market. Of course, at a central level and with some state governments, and I think this is something that we can work with, where some of your priority sector lending that you plan to do can be disbursed as credit line, discovered on a UPI app, and then consumers can use it in real time. Yes, sir.
Certain apps are there which they permit peer-to-peer lending also.
Not UPI apps, sir. They are financial services apps. They are not 100%, I would say, legal, regular, or because the source of funding is not known. Sometimes it is money coming from China, Russia. Of course, those are not UPI apps. What we are recommending are UPI apps, where we have a certain control and observability of what they are doing. And most importantly, they can help you discover credit very quickly. Like I said, you can open up an account within 5 minutes, 7 minutes. A small value, 5,000 rupee, 10,000 rupee credit line can be discovered very seamlessly on a digital experience. And then the end use monitoring can happen. So that's credit line on UPI, or what we call as credit on UPI. I think it's important for inclusion, it's important for supporting. Today, we do a lot of DBT. Imagine if that DBT was to made a credit line. If I want to give 20,000 rupees as support to a student, I have two options. I'll call him to my office, I'll give him a check of 20,000 rupees. Second, we will use DBT, the 10-year-old model. He has an Aadhaar number, and you will give instruction to NPCI to transfer 20,000 rupees to that Aadhaar number, which will go to his account. We have some structural problems there, but mostly it will work. Third, what we are saying is, instead of giving DBT, why not give him a credit line? And that credit line, make him link on UPI. Then, whenever he's even doing a 10 rupee transaction or a 20 rupee transaction, you know where he's spending, that consumer is spending. So I think that's the way you can build the use case. And hopefully, I don't think it will happen overnight. Some schemes will go live. So Mudra is going live. SHG loans are going live. KCC loans are going live. And then as these scale, then I think some of the other schemes can also happen. I think it's a well-known fact. Giving credit is making them more responsible than giving free money. The credit could be under capital guarantee scheme, which means that for some reason they're not able to pay, the interest part is waived off or some part is waived off, but at least not free money. They will earn for it. They will, I think, work for it. Very important. Again, something new that is evolving. I spoke about LIC. I spoke about EPFO. There are mutual fund companies. There are insurance companies who use this as a service from NPCI, where we provide account validation. We call that account validation. There are certain details that are given to us, and through our platform, again, which is NACH, we are able to confirm or even gives back account details of the person that you are seeing. So it could be Aadhaar number, it could be mobile number, it could be PAN number, basis of which we can get the name, account status, and few other things. These are important, sir, to your point when you were asking me about account validation, account deactivation, that before the Aadhaar payment is done, I can check the account status. Is it active or inactive? If the bank is giving me that status. If it is active, then I will push the payment. If it is inactive, I will not push the payment. So this is now being introduced, and most of the DBT transaction, now the organizations or the government organizations are first doing account activation check and then pushing the payment file. So important service, for knowing the end state of the beneficiary, of who that beneficiary is. But for that to happen, some primary information is needed. Mobile number, PAN number, Aadhaar number, something is needed for it to work. We have 5 minutes? Achha. Oh. NCMC, this is transit card. Mumbai has taken lead. MSRTC has taken some lead. This is for transit. It's a prepaid card, 3,000 rupees, no KYC, works across any metro, works across any bus service. I think great way to provide financial inclusion, identity, because that card becomes identity. They may not have a debit card. They may not have a UPI app. They don't have feature phone. They don't have smartphone, but they will have this card. So I think that's a good way to co-brand. You can see how Chennai Metro has taken lead. Billers, I think a lot of work has happened with Meta. Maharashtra government has worked with Meta, put a lot of the billers that you have in the state government on Meta. What's important that get more of your billers and departments being able to present bills on Bharat Connect, which is the bill payment platform. All these can be billers: insurance, pension system, broadband, fast. You can load your FASTag on Bharat Connect. Mobile, prepaid, hospital, challans, e-challans, municipal taxes, prepaid meters. Okay. I wanted to spend more time.
How many people are using Bharat Connect? Actually, most of us use Amazon. We start using Bharat Connect.
Yeah. So I wanted to spend more time because this is what we are not very sure of, and we are experimenting, and I wanted to share our experience. So time 5 minutes. I will not go in detail, but I think maybe I'll summarize. A lot of what we have done till now, we believe is going to be history. Because like I said, with AI coming in, it has become smarter and efficient in developing code. It has become smarter and efficient in understanding the problem. In fact, today I can write a one-page summary of what I want and give it to a smart AI agent. It can give me the code. It can also deploy the code for me. So I don't need my product manager. I don't need my technology operation manager. I don't need the engineer, the service engineer. I don't need anybody. And the code can go live. It can take care of my consumer problem statements. It can take care of call center. It can respond to them. It can tell me what I should do next. Practically everything. Now, to what extent are we going to adopt? I don't know. Because I think there is also the question of sharing data, because these are public models over which these agents are developed. At NPCI, we've taken the call that we will not do public models. But we have picked up some open source models available, or what we call them as large language model, LLMs, deploying them within NPCI, and then training them and creating our own agent. So we are in that process. And most important element required in that is the GPU, which is always, I think, MeitY has taken lead where it is offering GPUs to governments and like-minded organizations, a shared stack. So that is one option, but at NPCI, since our regulation doesn't allow us to share data beyond NPCI, we are putting up our own GPUs. And on those GPUs, we are training and doing some things. So, some of the things we are doing, very relevant, fraud detection. In the transaction data, I don't know who's the bad actor. My eye, I cannot see. And no matter how many, so I have one option. Either I apply a rule, no transaction above 5,000 will happen. Now that is omnious rule, because good people will also get impacted. So to be able to detect from a pattern to say that this transaction looks suspicious out of the millions that we do is only something that a model can do more efficiently than us as humans or as rule. So we've created some fraud models using that internal LLM. We are only 60% efficient. We are very bad right now. So we have deployed it at a lower scale, but I think hopefully we'll get better. Analytics. Today when I run a query, I want to know some numbers. I have to keep running maybe 10-15 times. Saket is here with me, he bears the brunt of it. To get to the point what I want to get to. But now to an AI agent, I can tell them what is the output I need, what is the problem statement I am dealing with. It will do its own query. I just have to give him access to the database. So we are working a bit there. Customer support. A lot of complaints. We are a B2B company, so number of complaints are lesser. But I can imagine for a government scale and departments that this room manages, this would be a big problem. And setting up call centers. Imagine if COVID was here at this time. This would have been a great help. So to be able to customize, automate some of these, and this is not taped voice. Don't mistake it as tape voice. It will find it as real as somebody speaking to you on the other side. And of course, promotional offers and if you have a sea of data, then who should be given DBT and who should not be given DBT? How do you know? I think the answer lies here. But again, like I said, as NPCI, we've taken the call to build internal model. I'm assuming governments will also take, whether it's state and central. And maybe there is collaboration required between a set of governments together, state government or central government, because if every state is going to start building it, it will be inefficient. And GPU is a scarce resource. We don't, like oil, it comes from a different country and it is rationed. India doesn't get a lot of GPUs. So it's important that more collaborative approach, if, like I said, if every state is going to do it, it will fail. So more collaborative approach is required if governments are to adopt this in some form. Few more models, we're trying to detect mule, data creation and usage. One second and the last topic I wanted to talk about was blockchain. I'm sure all of you have heard about it. There's a lot of activity Maharashtra government is doing, I can tell you. It's taken lead in this. NPCI has also worked on some projects with the government. Today, blockchain is synonymous with crypto, but it is the most useless use case. Sorry, I can't find a better word. For blockchain, I think the most important thing is to say that the proof, the value is sitting in the block. It is not sitting outside somewhere. So which means that if you are buying land, both your payment and the land ownership sits in that software block. So if you are moving it, whoever receives it, he becomes the owner also. Not just the owner of the payment. He is not just the receiver of the payment, he is also receiver of the proof, the source of truth. So today the source of truth is some register. That register is now sitting in a block. And then, so there are nodes, ledger of blocks, I will not go into details. And use cases, payment is there, lending is there, but this is what we are most excited about. These are non-payment, this is a non-payment use case. It is tokenization and fractional ownership. A room, a land parcel, a car, anything can be fractionalized, tokenized, and the ownership can move. So today if I have to buy a car and it is sitting on a blockchain network, then in addition to making that 5 lakh rupees of payment, the ownership, the registration of the car will also move in the same transaction. Today what happens? Payment is separate and documents are separate. Imagine if they come together. I mean, that's the end state, that in one transaction, both documents and payments are moving. There is no stopping. I think if not today, our next generation will adopt it. We are only experimenting today. And we'll have to continue to experiment without, I would say, keeping the security and the privacy in mind and making sure these chains are not open-ended chains. These are permissioned networks. When I say permission networks, it means that it has a boundary, it is run by responsible entities, authorities, and not everybody gets access. It's like the police database across states. When they share across within a closed user group. So I think that's on blockchain. Sorry, I wish we could have spoken more about it. Asset and money move together, real time. There is no settlement. Remember I told that when you make a person to merchant payment, and sir spoke about refund, money moves in 2 hours, 2 days. Here the money moves in real time, like P2P. And it could have locks, which means that while you move the lock, it could have a promise of payment, which means that it's like security. I'm giving you the ownership, but it will open up in 5 days. You can program it that way. So it can be applied in many areas. Money market, debt instruments, e-bullion, bond, gold, letter of credit, invoicing, financing, real estate, anything which is an asset or can be called an asset. The ownership is an asset. It can be moved. Some of the other technologies, I thought maybe the room would love to talk about. Unified ledger, that's the same thing. We just spoke about Printinet. Gen AI we spoke about. Thank you. Sorry for the time.